Welcome to Total Money Management. I'm back with Steve. How you going, mate?
Good, mate. Good, mate.
We're
lovely.
matching.
Lovely shirt. Lovely shirt.
The wardrobe.
There you go, folks. Look at that.
The wardrobe.
In joke. Right? Not all heroes wear cape, but K-C-A-P with dots in between.
Not a K.
Okay, not a K. So there you go.
If you want one, they're about $3,000 on the website.
Yeah. But an excellent investment if you depreciate it over 30 years.
Well, it's almost Christmas. Are you ready?
Yep, I'm ready. I've told the kids you're not getting any presents.
Just a new top.
Same thing every year, mate. Same thing every year. Here's money. Go and get yourself what you want.
Yeah. Oh, mate, I'm looking forward to a bit of a break, to be honest. It's been a bit of a year.
But it gets hot.
Yeah.
Go swimming and stuff like that, but it just gets that heat that's really depressing sort of heat.
The muggy.
Yeah. And then you turn the aircon on, you bloody freeze, and you get
It's a trap.
Anyway, there's Christmas and there's flies and ham and all that sort of stuff.
Well, Santa's coming, so it should be good.
Righto.
Big issue.
Well, Santa's been, mate. Santa's been in the US for the last 2 years with the returns.
Santa didn't leave a couple of years ago. He just kept throwing cash.
Santa just stayed.
Well, it's been a good run. We'll do a yearly wrap like we usually this time last year we did, which seemed to go really well. But I mean, a short version is up around 20% just this year, 26% this year, and with like, the momentum's just.
It's pretty good. It's yeah. I was watching last week's edition, and at the start I said the same thing, which is just like, oh Jesus, you just got to laugh. It's just crazy. Everything's crazy. Fart coin, right? Here's a joke. I'm going to call this fart coin, right? Now worth 700 million.
Insane. And there's the who's the meme girl that rug pulled everyone?
Oh yeah,
Hawk
Tour.
The Hawk 2 girl.
Yeah. She cashed them out for 50 million.
Well, she'll go to jail, I reckon.
Well, probably, but it just gets to show you the sign of the times.
Yeah,
that's what I mean. You see, it's really weird because you see most fraud at the top, right? And remember, I was thinking about this during the week because I was listening to our property special, right? Property Problems.
Yeah.
And I thought, you hear nobody sort of does, I shouldn't say nobody, but there's very little fraud at the bottom, right? There's always heaps of fraud when there's a bubble or there's easy money about.
Yeah, in and out.
Yeah, but you sort of think, well, why would you do fraud when it's just easy to, get a lot of work anyway? And we saw that in the, in the building industry and the banking and lending in Australia's, property stuff. Remember that there was that issue with the people at the gym, right? The gym trainers were like, you're bench pressing, and they're going, oh, Jacob, you ever thought about a national bank loan?
Oh,
it's like, Jesus, and they were being incentivised.
Yeah,
like
commission
they were
coming out their eyeballs.
Yeah, so that's
I think, in my mind, it's people know the least when there's a lot of hype. Yeah. So it's like, all right, crypto's gone for a massive run. I'm going to buy fart coin. Like, it must be right.
Yeah. You just buy them and they go up.
Yeah.
But it's like I said, it's the same with houses, right? Same with stocks. Yeah. You look at it at the moment. Apple's PE in the US is December 14, right? Yeah. Apple's PE is 40.
Outrageous.
The average is 15.
Yeah.
Now I'm not saying Apple's not going to outperform, but it hasn't been outperforming economic wise for 2 years. So you can see why Buffett went, you know what? I think I'm going to get rid of this.
Yeah. He gave it a good chance and it's not as if he woke up one day and thought I'm going to sell it all.
Yeah. It's the same with Microsoft. The PE Microsoft is like 35 or 36 or something. I mean, these are mature old companies. And what I'm seeing more and more of is people going, yeah, but they're going to rule the world for the next 10 years. And it's like, oh, God, this is what we had, this is exactly what went on in the 2000 bubble.
Yeah, well, there's so much fraud then as well. Like people just whacking up websites and new companies and just ripping people off with software.
Well, a lot of it, see, Jacob, was about growth, right? At the moment, it's the same with AI. AI is going to rule the world. You know, garbage trucks. Oh, yeah, they're going to have AI. You know, it's like, really? What's going on there? People generally, I read a Christmas report yesterday, right, from an Australian company that talks about shares, right, and recommends shares and stuff, right?
Total money management.
No, it wouldn't be us, mate. Let me tell you, not when you read this report. Right. This report was all about robots and AI. That's it. They are the future. They're going to take over the world. It's going to be fantastic. And I just thought to myself, there's not one line in this whole newsletter that has said anything critical.
Oh, I hate
and the thing I think is important is if people don't know about a subject, then you should probably provide both sides of the story, right? But this one was just 100% full on glowing.
Yeah, all in, go all in.
All in, robots we're going to have self-driving cars, robots around your house, humanoid robots. It's like, darling, they're like 30 years away.
They said that in the 80s.
But that's what I mean. You see what I mean? Like when you get these boom periods, this is exactly what Robert Schiller talks about in, I think it's chapter 6, New Eras, right? Everybody starts talking about future technology and the promises are, out of this world. And that's where you get trouble, because people who don't know what they're doing and don't think critically, as in like, I wonder if that's true, I want to go and read the other side. That's when you get problems, because everyone piles in, and then you get experienced traders going, I know what's going on here. Yeah. So they pile in, but they know that at some point they need to get out. Yeah. Yeah. Whereas the poor buggers who get in and go, oh, AI is the future, and then they lose their bloody pants because of the market.
Yeah, I think you hit a key point there, which was develop a critical thinking framework.
Yeah, well, you got to have something to hang it on, right? Like I say, if I say, oh, Jacob, the price of gold is, $4,000 an ounce, it's like, yeah, okay, so what? You got to have a concept of value, right? Because the price doesn't tell you anything, only in relation to the value, right? So if I say to you, oh, Apple's at $300 a share, you go, okay, what's that mean?
Yeah, or they'll go to a chart and they'll go, oh, shit.
Yeah.
Look at that. It's only ever gone left to right to the moon.
But I'm starting to see this a lot in terms of the macro market, where I'm starting to see a lot of charts that start in 1870 again, right? So again, it's like, Jacob, it just goes up. And it's like, well...
Were you born in 1870?
Were you around then? Well, congratulations, you got the 8% return. So, that's where it's... I'm just getting more and more concerned that we're in territory that is just absolutely insane.
Well, next year might change it up. Well, I think so this is a question that I've got, and I genuinely don't know the answer. I don't think anyone does. But when do we, if next year is going to be turbulent, when will we know?
You won't.
Like the oracle. Like, will it be Jan, Feb, March? Like, well, when do you get into the swing of things?
None. You don't know. And you see, that's the thing about stock markets, and what people do is the hindsight stuff, right? When it fell in, the March low was, the GFC low was March 9, 2009, right? That was, I think it was a Friday, right? Now, there is no way that you could tell on March the 9th that was the low point. You couldn't even tell in April or May or June. You need a long enough period to go, that was the low, right? Now, the problem with that is, and this has been shown in studies, right? What they've said is that we generally think the catalyst has to be big, right? Like, an earthquake in Tokyo, shocking economic figures, right? Some disaster somewhere, and everyone goes, oh my God, and they all sell out, right?
Yeah.
That's not the way it works. The problem we've got is we can't predict what the catalyst will be. And what we generally say is, if you say, well, Steve, it could be Donald Trump and it could be this, that's what we're saying is, well, okay, but the market already knows that. So it's something, remember, it's the unexpected event that gets you.
Yeah.
Because like we talk about in decision-making with your brain is a prediction machine. So it's taking in all the current information and predicting. What gives you your brain the shock is the information that it didn't predict.
Yeah, when it hits you quickly.
Yeah. Right. As I say, you open the gym door to go in, and it's been cleaned out. Your brain goes, "Hey, what the hell's going on here?" Right? Because your brain is saying, "Yeah, when I open this door, there'll be the gym and the benches and blah blah blah." If you open the door and there's nothing there, you momentarily get a shock, right? Because your brain is saying, "Yeah, I know. There's a picture here. I've been here before."
Yeah.
But when you get the unexpected, Brent, that's when your brain starts going, whoa, hang on, what's going on here? I don't understand this.
Fight or flight almost.
Yes. And that's what happens, right? You get an unexpected event and people go, oh, my God, and everybody starts selling out.
Yeah. Well, we know this. That's the thing. Like we know, and we're going off track a bit, but we know Donald Trump. It's going to be turbulent, right? So we already know that.
Yes.
So if we already know it's going to be turbulent, what's stopping the market from just continuing to be fucking crazy?
Yeah. Well, I think that's the problem with. It's the problem with fundamentals, and I talked about it a little bit during the Property Problems podcast, which was you've got to understand that what they're doing at the moment in Australia and in Australian property and the US stock market is everybody's talking about strong fundamentals. Okay, now there's nothing inherently wrong with that, but when the fundamentals get so far out of line with the price, you have to say, well, you can't rely on fundamentals if the price is batshit crazy.
Yeah.
You have to say, well, hang on, yeah, look, the economy's strong, but Jesus, it's not growing at 10%, which is the S&P 500 is inferring.
Yes.
Right? Price to income in Australian property, about 9 or 10. Okay, I know we've got immigration, we got land planning, I know we've got all that. But does that justify a ratio of 9 where the long-term average is, 4 to 5? And that's the point. And what I think I said it this week or something, I'm not sure, but it gets to a point where you say, listen, we've become irrationally exuberant, right? Everybody's just going nuts and it's working so far, but at some point everybody sobers up, right? So it's like the party, right? Everyone starts getting a skinful, having a great time, it's all fantastic, and you're trying to go, yeah, they know what they're doing. It's like, nah, they lost it 4 drinks ago, right? But everybody's still saying, oh, yeah, the fundamentals are good. And it's like, yeah, I know the fundamentals are good. They ain't that good.
Yeah. They're not at that magnified level to sustain it anyway.
Yeah. They just we know this throughout history that you get carried away and there's a melt up at the end. And that's where I kind of feel like we're at. And it just... I think I'd said in next week or this week, I can't remember the last time I saw markets like this, where it's a little bit, well, I won't say depressing, but I'm really, really concerned because if the market falls historically, as it has done in the past, it's going to fall 50% for a start. Now, if it does that, that's going to have, like it does in every market fall of 50%, huge ramifications. So if that's the case, then I have to say, all right, what's going to happen? Well, you have to look at the US and go, man, there's going to be something bad happen there for it to go from a cape of 39 to a cape of 17, right? That's more than 50%. So if you look at that, you're not just going to fall 50% and everyone goes, oh, that was interesting.
Well, in the GFC, it was awful.
Exactly. And that's why I say, this time around, particularly with someone like Donald Trump, who's fairly unpredictable, we don't know what the response is going to be. We've still got bloody wars going on all over the place. So sorry to be a bummer at Christmas time, but it's just, I'm just looking at it going, this is not lining up to be very good.
Yeah.
Hence why I think this event may be the catalyst for a complete change.
Like a complete restructure.
Yeah, like we talk about in the new normal.
Yeah.
Right? It's just I can't tell you what the event will be, but it could be an earthquake, a flood, The thing they've shown is it doesn't have to even be a big event.
No. It just it gets pinpointed after the fact. To your point, choose something. And go.
Oh, there it was. It was that big event.
It was
not
called on Tuesday. So
yeah. Well, it was the same in the Black Monday. You know, the day it fell 25% in one day. They were just desperate to go, what the hell caused it? And they put it down to portfolio insurance. But the Friday fell like 11% or something to start with,
They needed a tabloid thing.
Yeah. So it's just, you know, that's why I always think valuation is so informative and important, because valuation doesn't tell you stories. It's just a number. And if you look at through history, those numbers generally are very accurate.
Yeah, they're true.
Well, with a CAPE 39, what they're saying is, listen, you're not going to get anything for the next 10 years.
Yeah.
Now, if you want to pile in for the next 10 months, no problem, pile in. But please don't think this is going to go on for another 10 years.
Yeah. All right, let's get us back on track. So Monday, we've got key ETF performance and total return. So this is a November performance chart. It's always good, like towards the end of the year, to look at what the key ETFs have been doing or how they've performed. There's not too many negatives, to be honest. When you got Brazil and some of the Mexico.
There's not a lot. Everybody's having a good time.
Yeah,
mate.
Everyone's at the party.
We're down here being dampeners, talking about CAPE and Fartcoin and stuff.
Well, I mean, but we still emerging markets, and they've been good. They're cheap, right?
Yeah.
So it's not as if we're sat here going, you just got to sit on your hands for the next 10 years.
No. The portfolios, Wells 1, 2, and 3 have done quite well.
Yeah.
It's just the US is now like 70% of the global market cap. I mean, you know, when I say everybody's in the US, I mean everybody, right? Some of the emerging markets are insanely cheap.
Yeah, well, I was reading something the other day that there's that much debt from emerging market countries in the US. They're all buying US bonds anyway.
Of course. Well, it's the only place you can get, you know, why wouldn't you buy Microsoft and Apple and just, you know, spin it out?
Yeah, so that's the reason we always talk, if the US comes down, everything else will go with it, because the other countries are all invested in the US anyway.
And then what happens is when the panic sets in, they sell US equities, which pushes them down.
Yeah.
Right? So this is where, you know...
And they don't have a ham sandwich. They've got a lot of their
absolutely
investment in there.
Well, this is the problem with the trading system, right? We'll talk about that. We talked about it before, but you know, everybody wants the US to buy their exports, but they don't want to buy any US imports. And what that means is you get a problem because they're all piling into US equities, US property, and US bonds. They don't care what the yield is in US bonds because it's not about the yield. It's about reducing domestic demand in China, Japan, Germany, right? There you go.
Quick snapshot. Tuesday. So property prices in Sydney and Melbourne have fallen a little bit, which is, we're sat here going, yippee! They're still up for the year.
I think they you know, look, they got to cool off at some time.
I was looking at, so I'm looking at properties in Mullaney, and I know that it's a real hot spot at the minute, but they've come down a lot. I was looking at 4 or 5 4-bedroom houses for 1.3, 1.4, and now they're like 1.1.
Yeah.
1.2.
Look, they all turn. They all, you know, all markets mean revert. It's an inherent characteristic. When? I don't know, but I'm just, you know, it's like CAPE. I don't know when it falls, but at 39, I'm telling you, you're really asking for it.
Oh, there's been some hilarious questions on the socials. I can't quite remember.
Oh, right.
I'll find one.
Are they sort of, you know, what do we call it? Are they for, you know, suitable for work?
Suitable for audience? I don't know. We're effing and blinding anyway, so we can. I'll find it, but as we keep working through.
Yep.
You got Wednesday, which is the volatility. Like, consumer confidence is at all-time highs, and this is basically saying that people are expecting the US market to continue to, as we've been talking about. But it's just, if this chart should be the only chart you look at to go, well, maybe not. Like, maybe I won't jump in right now because every idiot is jumping in.
Yeah. But that's why I say look at 2000, right? And that's about 46, 47, right? Yeah. Look at it now. We're at 56.
Yeah.
Like, that's why I'm saying, that's why I'm really concerned. That's only one of, you know, I've got to the point where I'm having trouble filling the newsletter because there's
it's the same.
I've already put in consumer confidence. I put in the CAPE ratio. I put in the price to book ratio. I've put in the EBIT to EBIT value. You know, like I just margin calls.
Yeah.
Right. Like I'm just putting in margin loans and stuff, and it's just like Jesus. You know, how many times can I say it's expensive?
Yeah, we're getting people going, oh, guys, what, like, yeah, we get it's expensive, but what about? And we're like, no, you're missing the point.
Yeah.
It's expensive. There's not much else to talk about.
Yeah. It's, you know, there's sometimes when you just got to, excuse me, you just got to sit pat.
Yeah. Well, if you look here, so 2000 up at 45, 2002 is down here because we just had
GFC.
The tech bubble.
.com. Yeah.
And then same again in the GFC here.
Yep.
It's up at 40 and then
down at
20.
Yep.
So like this tells us
goes up and down like a yo-yo.
Yeah.
That's why I say to you, the confidence is simply reflection of the market's rising, we all feel good.
Yep.
Market's falling, we all feel bad.
Yeah.
But generally, the economy isn't always reflective of that.
Yeah.
Right? It just seems like this time, look, as I said, I don't know. It just looks batshit crazy to me.
Well,
what do I know?
We got to. I'll cut it up with a bit of a it's not a question, more of a statement from Dan Abbey on Instagram. Yep. He's like, "Great episode on the Property Problems podcast. Cheers, mate. We definitely need an in-depth one now of how we get ourselves out of this price rise mess
in the property.
In property, yeah. So we've done a couple on what's going on.
Yep.
And I think people are now
the next
one
solutions.
A bit of solution oriented.
Yeah.
But if you got any thoughts,
well, just it again. I can't make, you know, I'm not Nostradamus, but all I can say is, do we have a continuation of the way it is at the moment, right? And like we said at the end of the property podcast and attached in the paper that went with it, you have to say to yourself, okay, and this is where disconfirming evidence is really important. You've got to say to yourself, okay, you know, why do people think the property will continue? Oh, because, you know, Albo won't let it fall. Oh, right, okay. Because we've got, you know, hundreds of thousands of people pouring into the country. Okay, you have to answer those and say, okay, will Albo stop property prices falling? Now, they may want to, and Katie Gallagher came out during the week and actually said, you know, we don't want property prices to fall. We want a sustainable sort of growth level, right? Which gives you the idea that these people are somehow pulling the strings to make property expensive. And what I keep saying is this thing's been going on since 2000. So it's not just Albo, it's not Morrison, it's not Abbott, it's not Toombul, it's not Gillard, it's not Rudd, right? It's all of them, because what they've been doing is incentivising it. But in the terms of can it continue on, well, yeah, but then you're going to have absolute poverty mixed with absolute wealth, right? You're going to have a bunch of rich people and a lot of poor people, right? Well, that's clearly not sustainable. Yeah. So the argument of, oh, yeah, but Albo or Michelle Bullock will stop it is wrong, right? Because, as I said to you, well, why did Ireland let their housing market blow up? Why did Spain let their housing market blow up? Why did America? Why did Germany? Why did Japan? Why did Canada? Why did New Zealand? Why didn't they just, quote, save it, right? Well, it's easy. They can't bloody well save it. And that's what the Chinese are figuring out at the moment, because the Chinese are trying to stem their property decline, but they can't. You can't force people to buy, right? You can't force them to sell. But it makes sense at levels where people go, actually, I'm negatively geared and I'm losing money. Now I need to really seriously think about this, right? And that's what goes on. You know, as I say, Albo can't ring and go, listen, Jacob, I'll slip you a quiet $400 a week to cover your property, because the renters go, well, I'm not voting for that bastard.
Yeah.
Right?
And it'll cause issues elsewhere then as well. Like
absolutely.
You can't keep plugging these little gaps.
Yeah. This is why we've got a debt problem, right? Because everybody's sat at the debt table and absolutely gorged themselves on debt. And that's what the problem is, because the debt is not being spent to build widgets in factories and to contribute to the economic growth.
Productively. Yeah.
That's why the economic growth is low, because it's about what you produce, i.e. what you make, right? Well, if I buy your house, existing house for more money, we haven't made anything. And that's why economic growth is really low, but the property houses and the debts are going crazy, right? Because it's unproductive. Now, people will make money out of it. I've no argument with that, but I'm just saying someone's going to get caught holding the bag, right? That's the way markets work.
Yes. All right. Good.
Thanks. Damn, there's your answer.
I'm not going to add anything more to that because otherwise we'll be here for the next 45 minutes.
Yeah. Don't get me started.
Just move on, guys.
Right. Oh, God, don't get me started. Next.
Oh, don't get me started on Bitcoin.
Bitcoin's at 846 million. Michael Saylor, who's the Bitcoin guru, said it's going to 13 million.
Yeah. Oh, look.
How many Bitcoins are there?
26 million or something.
21.
21.
Right. Now do this. 21 times 13 million.
I can't do that, mate.
Right. It's 2.73 with 14 zeros after it. Right?
The new global currency.
He's a dickhead. But, you know, honestly.
What's the market cap at the moment?
That's not even trillion, gazillions, right? You just look at it and go, that's a stupid statement. That's absolutely stupid statement.
Oh, he's eating up on the market sentiment. Just making.
Oh, God, he's a bloody fraudster.
Market cap.
He's a fraudster. Anyway, righto. Here's another one, S&P versus valuations.
It's 2 trillion Bitcoin market cap now. Didn't know that. Not bad.
welcome to space, folks, where price means nothing. Throw it in with fart coin, Dodge coin. Is it Dodge or dog?
Doge.
Oh, there you go.
In the middle, mate.
There you go.
Elon's coin.
How many coins are they? Trumpy's got a coin, hasn't he?
Trump coin. Yeah. We'll make a coin.
We might do total money management coin.
TMM coin.
Yeah.
Just have one.
Why not? Just do our own currency. We'll just trade in amongst ourselves and get rich. You buy off me and I'll buy off you for a higher price.
That's property.
What can go wrong?
All right, Friday. This is basically just saying that the turning points of the S&P 500, like the extreme and the extreme highs and the extreme lows, basically.
There's nothing to say. It's all crazy. Bonus, righto, same thing. Strategists say the market. Oh, that's right. Yes. What I'm pointing out here, if I can just whack that up on the screen, what I'm pointing out here is, again, strategists and people saying, oh, you know, the S&P is going to end 2025, right? It's at 6,000, right? Oh, it's going to end at about 6,600 or 6,800, which is the average return added to 6,000, right? 10%, right? Okay, so in the end of 23, they said, oh, the market will end at 4,800, right?
Wrong.
Now, here we are at 6,050.
Yeah.
So, you know, that's an enormous miss.
They haven't. When have they been right?
Then they're seldom right, and that's what I mean. How many of them are saying, "I reckon it might end at 4,000"?
Yeah,
and it'll be a huge
that's
drop
bad for business.
Well, no, you know, you're going to go and buy stocks from a guy who's saying it's going to end at 4,000.
Yeah, well, exactly. That's the first thing I'd ask one of these blokes, though, if I was giving him some cash. Well, how many times have you been right? Doesn't matter about the return necessarily.
Yeah.
How many times have you been right?
Yeah, there's a few going on at the moment about, our yearly review. And you get all of the, someone said the other day, the Australian stock market's had extraordinary returns. And I thought, that's bullshit. It's gone up about 11%. You know, like you look at it and go, mate, 25 is extraordinary.
Yeah.
11 is like, oh, well, yeah, it's okay.
Just done a good job.
Well, it's a good job when you consider the economic growth's at 1% and falling. So anyway, the lesson of the week.
Yes.
Cool, that's in small print. What I wanted to do there, folks, is just...
So this is calculating volatility.
Yeah, it's just the difference between the property market and the stock market is that when you buy a property, the volatility is sort of irrelevant, right? Because you can't add a bit on or take a bit off, like rebalance. What I'm doing here is just showing people how you calculate volatility. I'm not going to bore you with it. You can go and have a look at it. But what I'm saying is, notice that when the CAPE is really high, you get higher volatility, right? Now, when you get higher volatility, and the measure of volatility is standard deviation, right? Now, if you have a look at standard deviation of 40%, which is not unusual in high CAPE eras, what you get is you get a reduction of 8% from the average annual return. Okay, the average annual return is 8%.
Yes.
Now, minus volatility of 40% is minus 8. 8 minus 8 leaves you with 0. That's why you want to avoid the high volatility periods unless you got a lot of cash and you know what you're doing.
Yeah.
But it's also the reason why you want to pay attention to when the CAPE is really high, because what it's saying is, listen, this thing will drop 20, 30% in a year, and then it may go another year down again. Either way, you're going to lose 50%. So the best idea is to sort of take some, do a Buffett. I'm going to sell Apple, I'm going to sell Bank of America, and I'm going to sit in the most cash I've ever had.
Take some off the top, take a breath, wait for the volatility to end and get back in.
It's not like, Jacob, it's not like you going, oh my God, but Steve, I'll never get the chance to invest again. It's completely wrong. We know you'll get another chance. You're 30. Yeah. I mean, I'll get another chance and I'm 62. Buffett,
maybe not.
Bit dodgy at 94.
He doesn't need another chance.
Yeah, maybe he's just going to go out on cash.
Yeah.
But that's the reason why you rebalance, because you've got to understand you're investing over a lifetime, and there will be opportunities when it's insanely cheap, and there'll be opportunities where it's insanely expensive, right? And that's where you've got to go. Okay, I've had a really, the US market since 2009 has compounded at about 14. That's doubling your money every 5 years, right? So we've had 15 years. So it's gone from 100, 200, 400, 800, right? That's why everybody's punch drunk, because the returns have been absolutely fantastic. But that's when the CAPE was 13.
Yeah.
Right? Now it's 39. That's 3 times as expensive. It's not the same market.
Well, you get from, if you're trying to grow your cash with a CAPE of 39, you're going to be waiting just as long to do that anyway. If you sit out the market for even 5 years and wait for CAPE to come down to 15, 17, and then you get the questions of how do you know that? But let's just say it does go back, come back down to 17 or 20, then you pile in. You'll get from point A to point B a hell of a lot quicker.
Yeah. It's just, it's just a matter of, the other thing is too, what we don't, people say, oh, well, you're not making any money because the CAPE's at 39. It's like, well, yes, I am. I won't bore you with that. But it's what I'm saying is, you might buy a property in Spain, right? Or you might buy, for average investors, you might look at it and say, well, Brazil's cheap, right? Oh, Mexico's cheap. Oh, okay, well, I'm going to buy some of the really cheap markets. I'm going to buy a bit of gold for hedging. I'm going to buy a bit of Bitcoin for hedging. I'm going to buy silver. Commodities are really cheap. So you might go and buy commodities, right? So it's never like, there's never anything where you go, oh, everything's just completely crazy, everything, commodities, everything, right? That's not the case. It's a matter of just saying the US market's really expensive. You've got to be careful because it does drag others down, but that doesn't mean that you can't make some income or get some, investments
elsewhere.
Well,
let's finish on this. So this is the last question from YouTube. So I came across your channel. I think it's the best in Australia regarding the topic. Thank you.
Only Australia. Jesus,
we're actually in 50,
height of these
we're
people.
In 50 countries now. Did you see the Spotify rap? However, I don't agree with the rebalancing strategy, as you can lose the 10 baggers. Keep doing the great work. This is 10 bagger Joe.
The fabulous 10 baggers.
Yeah. What do you reckon to the 10 baggers, Steve? I'd rather a lot of 8 baggers or 6 baggers.
Yeah, I think it's an interesting question, but there's a few things you want to have a think about. 10 baggers are unbelievably rare.
Yeah.
Right?
For the audience, what's a 10 bagger?
Everyone's aiming for a 10 bagger.
Yeah.
Right? The Henrik Bessenbinder, professor in Arizona, did research which basically said this. Listen, you get this, 3% of stocks of companies deliver the really big returns. And then the company that goes from a 5-bagger, let's say there's 100 companies that are a 5-bagger. Okay, out of those 100, 30 of them will be a 10-bagger. And then 30% of them, i.e. one, will be a 20-bagger or something. So the point being that the chances of you getting a 10-bagger are really, really low, right? That's statistically. The second part is the issue in terms of, look at Amazon. Amazon's a 10-bagger, right?
Yeah.
Now, in 2000, it went down 95%. So, who's going to hold through a 95% loss? Either people who didn't realise they'd bought Amazon and they're ignoring the market. There were very few people in 2002 going, Amazon's an absolute 10-bagger steal. Now, will there be people out there? Yeah, of course. But, that doesn't mean they've got skill. That just means they called out once in 100 times, Apple's a 10-bagger, and it becomes a 10-bagger, right? So there's a few reasons why 10-baggers are not that easy. And the other thing is too, you don't need 10-baggers, right? You're not going to pick 10 baggers over your lifetime, right? But you can make steady returns by using index funds, rebalancing, and the principles we talk about.
Yeah.
Right? So it's just, again, what you get when the markets are really expensive and everything's going crazy, what you get is you get people saying, like I said a few months ago, financial independence, retire early. Right? What do? You buy a Bitcoin and you ride it to the moon and you retire early in 12 months. Right, okay. No. What you do is you buy a Sydney property and you leverage up and, you fly to the moon. What do? You find a 10-bagger in junior penny stocks and you fly to the moon. You don't get that at the bottom.
No.
You get that talk at the top.
Yeah.
Right? And why? Because it looks easy. You just buy Bitcoin and it goes from 0 to 100,000. Right? And you say, okay, well, what about in 2022 when it went from 67,000 to 17? No, you just hold through that. And it's like, every time?
Yeah. One time, two times?
Two times?
Yeah.
Well,
we get so most of our clients come to us because they've tried to chase 10-baggers and lost a shitload of money. And they're like, actually, this is not working anymore.
Yeah. Or they're look, I don't want to sound like I'm arrogant, but they're the smart ones who think, I better learn something about this and then, I can do it. I mean, that's what I think is our job, to teach people, not to be reliant on us, but to say, listen, you can do this yourself. It's not really hard. Don't chase 10-baggers, right? Don't get out there and buy every junior mining stock because you'll probably lose money.
And I promise you, we've done that.
Yeah. Well, that's, we've all had a 10-bagger. I've had a 10-bagger and I'll match that with my 5, or 10 or probably even 15 where I've just blown the lot.
Yeah.
Well, that's the end of my 10-bagger.
Yeah.
Right? That's the way it works.
All right, well, let's leave it there. It won't be Merry Christmas quite yet before the next one, but
it'll be close.
It'll be close there. So, all right, we'll see you next time.
Cheers, folks.
As always, remember, we don't provide financial advice.